Hello, this is Jim Lang of the Lang Money Hour, where Smart Money talks. And I'm here today in the Vanguard studio with Mr. John C. Bogle. Mr. Bogle was the founder and now retired CEO of the Vanguard Group, the world's largest mutual fund company with $1.7 trillion under management. Mr. Bogle formed the first index fund available to individual investors, now known as the Vanguard S&P 500. In talking about the Vanguard S&P 500, Paul Samuelson said, "I recognize this Bogle invention along with the invention of the wheel, the alphabet, and the Gutenberg printing." Over the course of his 60-year career, Mr. Bogle has literally changed the face of investing. Fortune magazine ranked Mr. Bogle one of the four investment industry giants of the 20th century. Mr. Bogle's written 10 books, from the 1993 bestseller Bogle on Mutual Funds to this year's The Clash of the Cultures, Investment versus Speculation. Thank you for agreeing to this interview. Many of your previous books strike me as books that were really more of a how-to book. This book takes a much different perspective, a broader perspective, frankly controversial. Why tell this story now at this point in your career?
Well, to begin with, I have a love affair with history. And there are many things in the new book that if I don't write them down and put them between a couple of covers, they will be gone. They will not be part of history. So students of the financial markets, students of financial history, will, I think, be greatly enriched by the personal experiences I've had going back to 1951, all during my early career with Wellington Fund, a merger that I did that went wrong, and big mistake of my life, the creation of Vanguard, and many of the issues that we face today in the financial sector, including a disgraceful lack of much interest in being active voters among mutual funds. They're passive. They don't do anything to fix corporation governance itself. So it's history, it's a peek at the past, a peek at the present, and a little investment advice at the end, just a teaser.
Well, you talk about the difference between investment and speculation, and which is obviously the theme of the book. So maybe I thought that I could just ask you directly, what do you see the difference of investment and speculation, and what are some of the problems when we get away from investment and we go towards speculation?
Well, of course, there are 1,000 definitions of investment and probably 2,000 definitions of speculation. But the fundamental building block of that difference is investing is about owning corporations, businesses that actually exist, focusing on their intrinsic value, their ability to grow over the years through earnings, through paying out dividends, reinvesting the rest in the business, and holding corporations for the long run. That's where wealth is generated. It is not generated in the stock market. So when you have, let's call it, focusing on intrinsic long-term value as the definition of investment, speculation is betting on price, and price is ephemeral. Price is the price of a stock. It's anything but eternal. You're betting on price. You buy and sell with great frequency, while investing is a long-term process. Speculation is a short-term process. Sometimes it seems, Jim, getting shorter every single day. We now have some high-frequency traders out there who trade stocks every 15 seconds, but it may even be an average of 15 seconds. It may be trading in nanoseconds. Bam, bam, bam. That's speculation. It's not investing.